Please remember, none of this is financial advice. All money is a matter of belief. Adam Smith.
The financial industry is transforming to a digital economy, and we see digital assets as one of the most significant forces impacting our industry over the next 5 years. Digital assets are quickly becoming integrated into the existing framework of financial services, and it is critical we have the tools in place to provide our clients with solutions for both their traditional investment needs as well as their increased digital needs.
We see digital assets are quickly becoming integrated into the financial system. Todd McDonald from R3 is quoting a State Street employee, one of the largest banks in America. The infrastructure has been built and digital assets are the special sauce that allows openness and innovation. If we look at a history of money, money has been abundant. Beads, seashells, paper, even gold are the most successful means of payments. When we look at CoinMarketCap, we see thousands of projects. This is a positive. Gold investors will tell you crypto is inflationary because there's so many tokens, while Bitcoin maxis will preach about digital scarcity. A system that is fixed does not allow credit to be created. If your assets are deflationary, there are very little reasons to lend out your assets. New networks that emerge with tokens is abundance like seashells, but at the same time the supply is fixed to prevent high inflation. The networks with the utility will take dominance, and these networks are going to replace the legacy system as the next-gen financial system. The system is being transformed, and we are a part of it. Crypto IRAs are a way for you to pay less taxes for retirement legally. iTrust offers a wide selection of digital assets as well as precious metals. iTrust uses institutional-grade security by Fireblocks and Coinbase custody. In November last year, iTrust removed all monthly fees. What I like about crypto IRAs is every time I trade a crypto, it's a taxable event. But with crypto IRAs, I can trade as much as I want without being taxed, as long as I keep it on the iTrust platform. I can move from cash to crypto to gold. When my company offered mutual funds, I hated the idea of someone else managing my investments. That's why I like iTrust. I have the freedom to move in and out of trades while at the same time enjoying the benefits of what IRAs have to offer. So if you use my link, iTrustCapital/Darren, you'll receive $100 funding reward just by using the link. So be sure to check out iTrust as well as research IRAs. This is an opportunity that I'm happy to share with you guys.
I think, to be honest, no one can predict what it's going to be, but at a macro level, we will continue to see big institutions come into crypto. Those of us like Avanti who are building for the next bull market are building critical infrastructure that big institutions require in many cases before they will come in. We've seen some institutions like hedge funds and family offices come in, but the big money like pension funds, endowments, and foundations is still largely on the sidelines. They're waiting for the good infrastructure that they're used to dealing with, namely bank infrastructure on the custody side, to be implemented. And that's where Avanti is playing, and we're optimistic that we'll be able to bring that.
Never in the history of man has there been an opportunity for the little guys to get in before the big players. The incumbents, the large institutions in the world are waiting on the sidelines, waiting for the appropriate infrastructure and regulations to participate in this decentralized future. The beauty of digital assets is the wealth creation. There is immense opportunity to create, to innovate, to bring new products onto the market that serve the needs of the many. Through efficiencies, cost savings, and applying innovation in open ecosystems will allow innovations that are unimaginable. Utilizing crypto will create far more wealth than investing in crypto as an inflation hedge.
Everything will become an asset if it's not already an asset. So more and more things that can be tokenized, digitized.
That's what I mean, Todd, by the size of the asset pool that comes into the scope of financial services increases. We have estimates of what the total revenue pool looks at the moment, but I think over the next 5 years, we could see a 20-30% increase in that revenue pool, right? And that is huge. When you think that, what's the story been for our market? It's been consolidation and margin compression. Yeah.
Right. Yes, I think that this is the hopeful journey. So I think we talked earlier when we started on blockchain journey was around, can we have efficiencies? Can we reduce costs? And I think with tokenization, digital assets, it is about new revenue streams.
Everything will be an asset. tokenized intangibles, big data, carbon credits, time, energy, etc., as well as tokenizing the old world assets and allowing fractional ownership and allowing tokens to interoperate with smart contracts. The utility of these assets will create and expand the economies of the world. State Street is saying that it will increase the asset pool by 20 to 30%.
Private, non-financial companies, private households, also to get central bank money, we might induce the disintermediation of the financial system. Peter and others have talked about. This is the biggest economic risk I see. We don't know exactly how it will turn out. Now, as a central banker, it is not my or our objective to keep the banks alive as they are nowadays. But we have to face the fact that a large-scale disintermediation and large-scale starts already at double-digit numbers. If you withdraw 10% of the deposit of the bank, this is a significant shift in their balance sheet. This means a significant shift in their business model. This means a significant risk for financial stability, and we don't know exactly how that will turn out, how we will guarantee the stability of the financial system, neither in the subsequent steady state and when it will be achieved, nor in the transitory period. These are significant risks. That is why the Bundesbank always argued limiting it to wholesale CBDC is much more easy, involves much less risk.
This tech has the capability of disrupting the whole banking system. All of the wealth the banks absorb can be distributed to the consumers. Blockchains don't need profits. Smart contracts don't need managing fees. Martin from the Digital Euro Association states this could be systemic, and it's not the central bank's job to ensure the big bank's role. Now, I think in the short to mid-term that the banks are not going anywhere. They will adapt to the transition. Just from their positioning, they already are. They will find new roles in the Internet of Value.
On the part of regulators to have only insured leveraged banks issuing these instruments, and I laid out, despite the big steps forward that paper implicated, that in fact, actually, you don't want leveraged banks to be the ones that issue these crypto instruments. They settle very fast, and the traditional financial system is designed for slow settlement. And those two things are fundamentally incompatible. There's a lot more bank run risk if you have leveraged banks that are at the core of the financial system issuing these instruments. And the main reason is because they're leveraged and they do what banks typically do, which is borrow short and lend long. And if you start to see mass withdrawals in the span of minutes, which could happen with these fast payment instruments, that does increase the risk of some financial system instability.
The big banks are lobbying DC. The president's working group gave guidance on stablecoins that were in favor of the big banks to be the only ones to issue stablecoins. Caitlin Long is telling you fractional reserve lending for every $1 in the bank, they can lend out 10. It is a huge problem with crypto. The settlement times are instantaneous. If everyone were to withdraw their coins, this would cause a shock. It's a shock that banks are not prepared for. Do you think Congress and regulators will understand this concept? Or will the big banks successfully lobby DC and then collapse under their own weight when fractional reserve lending and stablecoins meet?
The interest in the use of DLT remains very high across the industry because it holds great potential. And the industry must collaborate to build the digital infrastructure of the future as a foundational step to support the eventual and inevitable transition to digital markets and tokenization.
The eventual and inevitable transformation to the Internet of Value. Todd McDonald is quoting Jennifer P. from DTCC. DTCC is the Federal Reserve of the stock market. They custody all equities in the U.S.
Understandings of crypto, and it's growing. So if you feel, and again, this is not limited to you because I've heard it from others, if you feel that there's an anti-crypto sentiment and that people are picking teams, I don't want to go there yet because I don't think that's baked in. I think what you're really seeing, if you put in perspective that long answer that I gave you earlier, it really is the pro-government, anti-government split. I mean, if you were going to talk about Republican and Democrat in its most pure form, And by the way, this has changed through time. Each party has been on different sides of this, and I think we're in the process of another evolution of how the Republicans are going to be in terms of policy versus the Dems. But as I've gotten involved, a Democrat would typically believe that government should provide the best solutions to our problems. A Republican, in the truest sense of the word, again, in my world, would say that no, the individual provides the best solutions available. The truth is, the answer lies somewhere in between.
We are seeing a push from politicians to politicize crypto. I believe this is an outcome from the lobbyist groups. Two wings of the same bird. Both sides want the same exact thing, and that is more control. Pro-government route is CBDC, and the government monitors all transactions on their platform. Pro-individual route, innovators will create platforms utilizing public ledgers. Everything in a public ledger is out in the open for anyone to see. This means that any type of investigation would not require a warrant, stripping away a right to privacy, AI watching all wallets.
So, I think if you look at a vision for what we want, which is open, accessible, interoperable, a standard and technology that people can innovate on top of without permission, that's the kind of dollar I think we want to win in this space race and on the internet, as opposed to something that is tightly controlled, government administered, and the like, which is what China's initiatives really represent. And so I think the US is winning. I think the question is, can the US really get some energy behind this and ensure that this kind of market competitive open model, which has been, I think, how the West has approached the internet over the past multiple decades, can they approach that in the convergence of the internet and the financial system?
Stablecoins are the reserve currency of crypto, dollar-pegged stablecoins. There is a convergence of internet and the financial system. And if the U.S. allows innovation, it will secure its seat as the reserve currency of the next-gen financial system. How Tranglo enables fintech unicorns. When e-commerce giants like Alipay and WeChat Pay knocked on our doors and asked our group CEO Jackie Lee about Tranglo's entry into the Chinese heartland with 2 partnerships. He said when you look at the customers and growth numbers of Alipay over 1.2 billion and WeChat Pay over 400,000, they are the most direct route to the heartland of Chinese payment industry. The Chinese around the world is increasing too, and we have a huge potential in terms of processing value. Tapping into China's position as the second largest remittance market in the world has enabled us to do something nobody has done before, enhancing and cementing a rare regional expertise by bridging the gap between the old and the emerging payments corridor in Asia Pacific. The US and China have been in a trade war, a currency war, and if the issues are not resolved, it will end in a hot war. Now, RippleNet partners have been the first to be granted access to China's financial system. Remember Amex and Linlin Pay. Also, Ant Financial was blocked from purchasing MoneyGram. Now, Tranglo was bought by Ripple, and 40% of the stock was owned by Ripple in the Tranglo company. Tranglo is using ODL, specifically XRP. Now, I wonder if the trade negotiations in some capacity involved currency conversion from USD to won. We have seen BRICS nations move away from SWIFT, yet RippleNet is being accepted by China in some capacity. If there was any objection by the Chinese Communist Party, they would have immediately stopped these integrations. However, we've seen the opposite.
We want to build on the existing client base that we've already got using us for fund administration for their cryptocurrency funds. So we've already got, quite a good core client base, but we're getting, you can imagine we're very busy at the moment responding to a lot of clients who are looking to launch funds, as well as clients who are just trying to find out more about this. So there's definitely core to what we're doing at the moment over the next year or two. There's definitely a very strong client angle and growing that client base.
State Street, which is one of the second oldest banks in the U.S., one of the largest banks in the world, has a bunch of clients asking them for crypto integrations.
People like Gary Gensler out there who, my mother used to say, you're too smart to be so stupid. I would say that to Gary Gensler. You're too smart to be so stupid. So stupid. So stupid. He is literally impacting the marketplace through his public comments, misguided public comments, and through enforcement actions. That's why the answer to your question is yes. We're going to need to legislate. Congress, the legislative branch of government, is actually going to have to do something in this area to rein in these regulators. All right, because if we don't, and I would argue that Congress has done very little that it's supposed to do since 1998. That's why everybody's so frustrated. I mean, we haven't done a budget, 12 appropriations bills through the House, through the Senate, and across the president's desk on or before September 30th of each year, midnight September 30th, since 1998. What does that do? Well, that tells all of these bureaucrats that nobody's going to be supervising. Okay, so they come before a committee and they think their job today, unlike it was in the 80s, the 70s, they think their job today is to be as vague and evasive as possible because they're the king or queen of their little fiefdom and they're going to run it just how they want. So yes, we are going to have to take back the authority, and that means we're going to have to do something.
Midterm elections are soon and the president has low ratings. We are seeing a push from Republicans to politicize crypto. I think if the Republicans get the House, which seems plausible, the pressure will intensify greatly for Gensler. No society can surely be flourishing and happy of which the far greater members are poor and miserable. Adam Smith. Thanks everyone, I hope you enjoyed the show. Please remember to like and subscribe and comment below. If you're interested, I have a Patreon.